I buy stocks or should I buy bonds? Stock is simply I'm buying ownership into a company. So I really want to be an owner. And if I'm buying bonds, I really am being a loaner. I'm more like a banker. I'm loaning money to a company. And both are really very appropriate for many investors. So this question, I think, is often asked really early in the planning process. And I think it really is best answered after you have a financial plan, after you're really clear about your financial goals. The decisions on how to invest your money become so much easier because once you know your financial plan needs, you then can start backing into what type of investment return that you need, and then the right recipe of stocks, bonds, and actually other types of investments can generate the return that you need. And so what you end up with is a custom financial plan for your specific situation and a custom investment strategy that's designed to achieve all of your goals of your financial plan. Another element to this discussion about stocks or bonds is age and risk. If I'm a 25-year-old and I've got a long way to go for retirement, probably being invested in almost all stock makes tons of sense. On the other hand, if I'm 65 years old and I'm in retirement or approaching retirement, I probably, even if I'm an aggressive investor, I probably want to start thinking a little bit about safety because of the market cycles and the economy changes. Bonds can provide some stability that can smooth out the ride a little bit. And preserving capital, preserving your wealth in retirement is crucially important. Another part of the decision then is when we think about stocks and we think about bonds, how do we buy those? And then this is where we get into the discussion of, do I buy individual stocks or do I use package products like a mutual fund or exchange traded fund? And that gets to be a little more complicated depending upon your situation. But in short, if you're starting investing and you maybe haven't accumulated a lot, it probably makes sense to buy a package product like a mutual fund or an exchange traded fund because you're getting some professional management, you're kind of putting your money with other investors, and you can probably get more diversification. You can spread your money around to different types of investments, but you can also at some point maybe make that transition to individual stocks or individual bonds. And that can be really attractive because it's nice to know I own, for example, 100 shares of Facebook, and I've got some Amazon, and I've got these other great companies. There can be a really neat effect of knowing exactly what you're buying, but you want to always remember, it's the old rule of don't put all your eggs in one basket. When you buy individual securities, you need to have enough money to spread the risk around. So that's one of the great advantages of package products. They, by their very nature, are very diversified already. So what's the logical step that we should take to figure out, do I buy individual stocks, individual bonds, or some kind of package product? And this is where I go back to the financial plan. If you've got a great financial plan built on all of your great goals, it's going to be a lot easier to back into the type of investment return that you need. And if you know that, then it becomes a lot easier to figure out the kind of investment structure that you need. And it probably will end up being some type of individual stocks, individual bonds, and probably some packaged products like mutual funds or exchange traded funds. But the nice thing is you don't have to have that answer right away. Build that great financial plan first that are based on your goals, and you'll start to back into the right answer on your investments. If you like what you heard today, you'd like to learn more about this or other financial topics, please visit our website where we have a lot of information.